Good morning, traders. Chris Buss here with your morning look at markets for Monday, May 24th. Taking a quick look at futures. Equity futures are up about 0.5%. Copper and the precious metals are mostly flat. Oil's up 2%. On the macro front, we've got not a lot going on. Chicago Fed Activity Index at 8:30. Plus, we've got 4 FOMC speakers today, so they're going to be out in force, banging the drum on whatever they want to bang the drum on, I guess. I'm sure they'll have all their talking points ready. I think there's a big meeting in June. I'm not sure the dates. I think it might be the 15th, somewhere around the middle of the month is the next FOMC meeting. So let's get into this. I hope you guys had a nice weekend, found a way to sharpen your saw outside the charts. So let's dive into it. What I want to do today is go over the crypto space very quickly, look at gold, look at oil, and then we'll get into the indexes and the FATMAAN trades. So last week, we saw a lot of turbulence in the crypto space, and we also had equity options expiration on Friday. So, looking at the Grayscale Bitcoin Trust here, we had this topping structure, then a quick decline, culminating on Wednesday with this gap down and big move down to 28, with a healthy reflex rebound on Thursday. But notice there was a big jump, and then it closed below the 200 in gold here. And then Friday they sold it off again, about 7%, putting price squarely back below this 33 level, back below the well below the 200, and into this void here where there wasn't a lot of trading during this quick advance. And there's a very technical term that we call this. It's called a bear market. Yeah, it's called a bear market. Down 30% off the highs and price below the 200. That's a bear market. Notice all the moving averages are bearishly stacked. What does that mean? The fast average, the 80 EMA, is below the 20 EMA, which is below the 50 EMA. So, just from a technical standpoint, those declining moving averages combined with the 200 is those are going to be resistance levels on the way back up if buyers step in. So, anybody that bought above 33, all in here, all this traffic in here between, say, 46 and 55, from a psychological standpoint, they're all trapped. Now they have a big decision to make because they're underwater. Do they say, well, everybody knows crypto is a very volatile space. I'm used to it. We've seen this so many times before that you'll have a big drawdown and they always buy the dip. That's true. It is a volatile asset class, and they have bought the dip. But when it's you, when you're the guy going through the drawdown, you've been trading long enough to know how painful that can be. To say you bought at 50,000 or 55,000 or 62,000, and now you're at 38,000. That's real money. So what really has to happen for the bulls is they've got to step in, get price above 33, recapture the 200, and start building a base above 33. Otherwise, I say anything below 33 keeps this vulnerable for a move down towards 23 at the bottom of this void where technical support comes back in. Let's look at Ethereum. Parabolic move going from 12.5 to 95 in a month. And now we're on the back side of this parabolic move. I put the fibs on here just to show you. We've already retraced over 62%. We're down here at 39.5. And so this would be a perfect place for the bulls to step in, just because there's a level of technical support right here. If they lose that, then your next target is the 50 EMA down here at 33. You've got some technical support at 26, and then you've got the 200 all the way back here at 18. So really important here for the Ethereum bulls to step in and stem this decline before it runs away with itself. Let's look at gold. Gold has been on this nice 2-month advance, bottoming here in April with a divergent double bottom, and we've moved from 157 up to 176. Notice how steep we're getting. Notice that we're getting extended beyond the 8 and 20 day. If you're not in, I don't think you can get in now. It's just too extended. I wouldn't be surprised to just see a baby pullback to the 8 day would totally be within reason. Even a pullback into the 20 down here at 171 would be within reason. And if I wasn't in, I would certainly be looking to be a buyer back here at 171. And if you've been long, time frame is everything, right? If you've got calls for January of 22, I think you just sit tight and you're in it for the foreseeable future. If you've got short dated calls, that expire in a week or 2 weeks or even in June, I think you've got to be cognizant and prepared for that pullback. And if you start to get a sense that gold is pulling back here, you may want to tactically exit those long positions. And that would go for miners as well, because they're going to have a commensurate move with gold. So just be aware that things are extended. Pullbacks would be within reason, but within the context of a bull trend. I think gold is going higher, but not without pullbacks along the way. And a lot of people have gold futures, GC, up on their board. I've got 2 levels that are important. There's resistance at 1877, and also there's an important level at 1922. If gold can take out 1877, I think the doors open to 1900 and then 1922. If it gets above 1922, I would regard that as a breakout. But I think that would be unusual to see without a little pullback first. So last week we were talking about oil. Here we've got a rising wedge. This is USO. This is the ETF that tracks the oil futures. And you can trade this with a very liquid option chain. If you've been trading it, you know all that already. Price has been working up in this wedge. Notice the bearish divergence. Rising price, falling momentum, falling RSI. That's a yellow flag. You don't really want to see that as a bull. You want to see momentum rising as price rises to identify a healthy trend. We see that price has dropped out of the wedge And remember last week we talked about the softness due to the U.S. negotiations with Iran to lift those sanctions on their oil exports. We said that we didn't think that was going to be a big supply issue because Iran is selling all their oil anyways to China on the black market, plus anybody else that has money. All that's going to happen is for China, the price goes up and Iran continues to sell their oil. So on Friday, we saw price pop 2%. And then here this morning, we're up, 3% on Friday and up 2% this morning. So maybe the oil market is coming to that realization that, whatever happens to Iran, it's already baked in the cake. They're already selling their oil. And as the economy opens up, maybe they're thinking, demand picks up as well. That's what I think. So there's two levels here that if you want to mark on your chart or set some alarms, even if you're not trading it, if you're trading energy equities, they're going to track. But I wouldn't want to see USO drop below 42.67, 42.67 on the low side. That represents the 50 EMA. And as far as a breakout, I have that level as 44.55. So within this little range, there may be some chop, but if price breaks out and recaptures this wedge, that would be bullish and probably open the door to higher prices. So if you want to mark those levels on your chart, 42.67 and 44.55, I think those are important levels. If you drop below, energy equities are going to suffer under that scenario. And notice that if price drops below that 42.67 level, you could see price come all the way back to 40 on USO to tag the 200, which is right down here at that level. That would be a pretty significant decline. But if that happens, that would be a good place to try a long on a tag of the 200. Moving into the indexes, we had the big 2-day advance off of this double bottom. Came up here Friday to tag 418 and officially close this gap. And then we pulled back to the bottom of the gap. Today, I think you can use 415.50 as your pivot. On the downside, I think 414 is important. I should have had a reaction level there. 414 is important. But above 415.50, I think you can look for a move back up to the top of the gap at 418. And then if you get a breakout above 418, I think you can look for 420. And if if we get that, that's pretty much gonna seal the deal for the bearish case. If we get back up to the prior highs, that doesn't mean we can't go back lower, but any kind of scenario of this rolling over lower high, be putting in another higher high. So if you've been looking for that scenario, which was what I thought we were going to come up here, roll over, then roll over again with a series of lower highs. That hasn't happened. So anything above 418 and certainly 420, I think you got to be looking long rather than short at that point. Here's the 30-minute chart. Nothing really different. We did come up and close the gap. Pulled back into the afternoon, and now we're down here. So I think 415.50 and then 414 are your pivot levels off the open, and then you can trade the levels after that. I did want to say It's not uncommon after an OPEX, the week after OPEX, can often be inflection points in the market. Why? Because during options week, we've talked about that volatility compression that you often see into that OPEX. And once those forces are released with the option expiration, the market is a little bit more able to move more naturally without those big call walls and put walls in place that tend to lock price into the option expiration. So those call walls and put walls will now be rebuilt for the June expiration. So we're early in that process. So we'll see if we drive higher or drift lower in the days and weeks ahead. QQQ 2 hour. Notice that the chart looks a lot different than the SPY chart. SPY has been outperforming the NASDAQ. Here we've got a series of lower highs. We came up to this level on Friday and got rejected. I think for today, it's all about 327. If price can hold 327 and then break out above 329 and 330, I think the bulls have a chance to get some momentum going to the upside. If we see price come into 329 and 330 and roll back over again, that'll be a big signal that the Qs remain weak. And certainly if we were to lose 327, then the door is open to 324. And that has been a very big level going back weeks and weeks and weeks, where 324 had been a level of support and resistance way back in the chart. You'll notice we've got a little gap there yet to fill. So key off at 327 today. Here you can see it in more detail with that open gap here, and then the prior lows down at 317. I've got 330 marked as an area of overhead resistance. I think if you break out above 330, then you got a shot to come up here to this gap at 333 to 334 and have a chance to fill that. So this morning, if you can get a pop over 328, I think you can try a tactical long against that level. See if you can get a push to 330 and then hopefully a breakout. If you're more inclined to have a less intense type of a trade and something with a little bit more duration, wait for a breakout above 330. If price can break above 330 and take out all this congestion below, then I think you've got a much better chance of building on that and see if you can get up to 336 up here and then possibly even a breakout down the road. So if you're really actively trading, you can work in here in the 327s. If you want to wait for something with a little bit more duration, let price resolve either above 330 or below 327, and then you can take something with a little bit more duration on it. IWM, I think the levels are becoming very, very clear here. Rejected at 222.50, rejected it at the same level, 222.50. We've got a downtrend line that price has come up to and failed both times. We've got the gold EMA, which is the 50 EMA on the daily. Price closed below that. So I think below this 220.50, I think you can lean bearish. And I mean, for me, I'm not trying any longs in here. just, I mean, too much congestion, too many whipsaws. I want to wait till 220, 250 gets taken out here and then go for a $3 move up to 225.50. I think that's an easier trade than messing around in here. If you want to give it a shot, just you can use that 220 as a level, and that's actually I'd use 221. That's above the 50, and then see if you can get the breakout at 222.50. But below the 50, I would still lean bearish for this potential move down here following a series of lower highs. Here's a 30-minute chart. You see those levels very clearly. You can see where the downtrend line comes in and these prior rejection areas. No gaps that I can see that need to be filled. So it's a pretty clean chart from that perspective. I will mention on earnings, we've got a lot of retail and we've got a lot of regional banks are going to start reporting, and those are big components within the IWM. So if we get a lot of retail and bank earnings where there's positive surprises and the price trades up, that would probably be reflected in IWM. If you're new here, I really appreciate you spending some time with me. I hope you're getting benefit out of having all these levels pointed out to you. That way you can focus on your execution, and I think that's the quickest way to improve your trading. If you can trust the levels and then practice your execution, I think you'll see your trading really improve. Hit the subscribe button, hit the alarm bell, jump over in the show notes. There's a place to register for all my content. That way you'll get everything sent to you no matter when I post. And of course, longtime listeners, I really appreciate you being here. Please do me a favor and send the link along. Give me a thumbs up. Give me a positive comment. Let other people know that you value the work and it's helping you in your trading. I'd really appreciate that. So moving on to Fatman. Facebook had the breakout. Came up here to 319.50. Had a little pullback into the close. I think today it's pretty clear. 316 is your pivot point. Anything above that, I think you can be long. Anything below that, you may see a pullback into 314 and possibly even 310. Seems like it's been pretty strong. You may want to focus on the long side unless you see things turn. But we're definitely in a short-term uptrend. And if you got a breakout above 319.50, which was the high on Friday, I think you can look for 323, 324. Apple, more soggy than the rest. We had this little fake breakout above the trend line, but then pulled back in below. I think you've got to see this trend line get taken out and a move back above 126.50 in order to try a long and look for 128.50. But I'm much more a wait and see, taking a wait and see attitude on Apple. We've got many lower highs. Hasn't really shown any upside power along the way. Everything's been capped by this downtrend line. We do have a little gap to fill down here. And if you were to get a break below 124.50, then I think the door is open for a potential move down here to test these prior lows at 122.50. So be careful on the long side. Make price prove it. Make price move above 126.50 before you take a long. Tesla had the fast move down. Been chopping in this range between 560 and 595. We had a false breakdown here down to this in the high 640s. Came back into the range. Once you come back into the range after been out, the technical target is the opposite side of the box. We got that move, and now we're moving back down. To take a long, I think you got to take it here on a breakout of 595 or try to get long at the bottom of the box. I don't think this is any place to get short. I think you got to wait for a move either to the top or the bottom of the box before taking a trade. Right here in no man's land, I don't think you can really do too much. So I would be long on breakouts above the box and short on breakdowns below the box. Microsoft, big down channel, breakout, holding this 245, which was a big level, is a big level on the daily chart. I think as long as it holds 245, I think the bulls can stay long. Look for a move back up towards 246.50, then 248.50, then 251. But dropping back into this down channel would not be good. You want to see price above 245. You want to see that held, and to build on these gains. Otherwise, you fall back into this channel, then the target becomes the bottom, and that's way down here. So bulls certainly don't want to see that happen. Amazon was pretty soggy on Friday, down 1.4%. We had the free 50 club deliver. Price got stonewalled here at 32.50 and then made a fast move back to 3,200. That was your $50 move on a Friday afternoon. And then price just consolidated there at 3,200. So 3,200 today is your pivot. Above, I think you can be long. Below, I think you can be short. The really big level on Amazon is 3,100. That is the daily 200, and it's a big pivot point on the daily chart. So thinking longer term, as far as FATMAAN, as far as NASDAQ goes, you don't want to see Amazon lose 3,100 down here, because then that could open up a downside move bigger than what we've seen in the past. So 3,200 for today is your pivot. 3,100 down the road may be a very important pivot on the daily chart. Google, little move up into this range and then pulled back. Really easy today as far as setting up the pivots. Use 2,300. Anything above 2,300, you can see 2,330. Anything below 2,300, and you can come back in here to fill this gap and hit 2,270. Anything below 2,270, I think, comes to the bottom of the box at 2,240. Netflix, downtrend, break back into the box, little weakness into the close. Use 500. Anything above 500 targets 507 and then 515. If it fails to hold that 500 level, I think you're coming back to 492. And if that doesn't hold, you're coming back to 485 at a minimum. That would really look like a fake breakout if you moved all the way back in here. And then lastly, let's wrap up with semiconductors. Big 2-day move. Coming off the bottom of the box. Breakout. Broke above the trend. Came up in here to 241 and backed off. I think for active traders, this is a tough level. to get involved right in here. Not a lot of natural, support or lines to shoot against. I think your lines are here at 240, 250. If you break above 240, 250, I think you can get long and look for this gap to fill up towards 249. If it drifts lower, probably fill this gap down to 234, back test this trading range, and I think that would be a point where you could take a long at 233.50 and then look for a move back up to 242. If it drops below, then your target's automatically 224, and then that would be a place to get short because this would all look fake and you'd be moving back into this trading range. So let's wrap it up there. Hope your Monday and your trading week gets off to a good start. This has been Chris Buss with Trader's Profit Compass. Have a good trading day and talk to you next time.